Hello and welcome to Infosys Earnings Edge. The company has just come out with its earnings. Um, there is a guidance that's coming in with respect to FY25, which is 20 to 22% EBIT margins there. I have with me Rucha, who's the research analyst tracking IT. Rucha, what are the basic numbers that you're getting as of now?
Yeah, so Infosys has just come out with the result. The guidance for FY25 implies a revenue growth of 1% to 3% in constant currency versus what was expected, somewhat higher, around 4 to 6%, while operating margin guidance is in line with the estimates at 20% to 22%. The revenue constant currency for the current quarter is from negative 2.2% in CC terms. This is far much lower than what was expected. The expectation was negative 0.6%, while the reported is minus 2.2%, Sajid sir.
So it's basically a degrowth in revenue on a quarter-to-quarter basis,
Yes.
up to the tune of nearly 2%, which we are seeing there.
Yes.
And that's much worse than the street estimate, which is there. What about the margins? Are the margins and the bottom line pretty much in line with street, or is it only the top line disappointment which is coming in?
So the margin is also a disappointment for the street. The reported margin is 20.1% for the fourth quarter, while the estimated was 20.7%.
So it's basically, again, in TCS we saw the EBIT margins going up.
Yes.
But here we are seeing the top line missing the target. You have the EBIT margins missing the target, and hopefully the bottom line is also missing the target. Do we have the analyst Gaurang Shah? Yeah. So what could be the reasons for this?
So maybe I think the uncertain environment, right? The clients are not sure about where the demand will go. There are cost optimization deals, there are larger deals. Smaller deals are very less in number, and that is why pricing is stuck to a longer duration, I think. And now we have Mr. Gaurang Shah, the head investment strategist of Geojit Financial Services. Hello, Mr. Gaurang.
Hello, good evening to all of you.
Good evening. Hi. So let's have your take on the results. What do you think of this disappointment? I think this is huge for the IT companies, and the guidance is really huge. What are your takes on this?
So I think when you compare TCS and Infosys numbers, then definitely, and in terms of expectation also, there has been a little bit of downtick. And as far as the street expectation was concerned, the street did not expect any kind of runaway numbers. But in terms of disappointment, backdrop of environment and events under which the IT sector was working, one could go in with a lower expectation. Possibly a knee-jerk reaction on the counter could be seen tomorrow morning when we open up for the trade. As a disclosure, we do have a positive coverage on Infosys since we are discussing the stock on the results. This is purely on the fundamental side from a long-term point of view, and management's commentary in terms of the outlook will be of more of a focus. I think press conference or some kind of statement released from the company could possibly guide us to the outlook in terms of future. But we believe that constraints were there in the past, and that's primarily the reason why we are witnessing these numbers.
Gaurang, if I can take you through the numbers, the reported numbers on a quarter-to-quarter basis is negative 2.1%, and in constant currency terms, it's negative 2.2%. So both in constant currency and in reported quarter numbers, quarter and quarter numbers are below the street expectation, because street was expecting between flat to 0.5 to 0.7% degrowth coming in on a quarter-to-quarter basis. So, what do you attribute this huge differential in terms of the degrowth which we are seeing on the top line front?
So, spend, budgetary cuts, discretionary cuts, and of course, not able to rope in large ticket clients would be the primary reason in terms of this kind of a number reported. But yeah, I mean, street was expecting flattish numbers, but this is a little bit below than what the street estimates were there.
Also, another thing which is there is with respect to the EBIT margins there, because there is a contraction of EBIT margins. Your EBIT margins have fallen from 20.7 to 20.1, and that's also a bit of a disappointment which is coming in.
So, in an environment which is very, not very conducive, margins do come under pressure. And there is also a concern in terms of headcount and attrition rate also, which I don't have the number in case if it has been given out by the company in terms of attrition. Like I said, the environment, the backdrop of events, we did not indicate any kind of positivity in terms of margins improving. In fact, this could possibly lead to spillover in terms of numbers first quarter this financial year. But possibly second half of financial year, you could see some kind of improvement come through, provided they are able to rope in large ticket clients and possibly improve the margins.
Gaurang, marginal decline in attrition from to about 12.9% that we saw in December to 12.6%. So, there's a marginal fall which is there in terms of attrition which is coming in.
So this is a little bit better. In fact, even when TCS reported a better number as far as the attrition rate is concerned. So, we were all aware that new headcounts were put on hold given the kind of constraints that were there. Possibly if the deal pipeline or large ticket clients start roping in, then we'll have some kind of improvement. But this number and marginal downtick number on the attrition front is good news.
Got that, Gaurang. So basically, I just want to ask on the revenue front. Revenue for FY24 is reported a growth of 1.4% in constant currency terms, while the guidance was at around 1.5 to 2%. So that is again below the range guided by the company. So how will the street have a take on this?
So street, of course, like I said in the beginning, you might see a knee-jerk reaction on the counter tomorrow. Possibly, the downward rating could also be seen, but since the numbers are just coming out, very difficult to comment on that. Even my team would need some time to possibly dissect the numbers. And like I mentioned, when Europe, US go through difficult times, when discretionary spend is cut, when budgetary cuts are there, this kind of a number does send in a little bit of concern, at least in the immediate short to medium term.
I just want to get your take on the TCV $4.5 billion in Q4, and also the fact that the guidance for FY25, which they have given 1 to 3% growth in constant currency terms, operating margins 20 to 22%, which is pretty much in line. But the revenue growth targets, which is very disappointing because Street was expecting 4 to 5%, and the TCV at $4.5 billion. How do you look at that as a whole for FY25?
It has been history, very conservative in terms of giving out guidance with respect to large IT companies.